Welcome to DeepTech315. No surprises with our lead off. That, of course, is Nvidia's quarter. So much speculation, anticipation, and as of this recording, we're a few hours into trading the day after they reported, and the stock's down 4%. Initial thoughts?
As crazy as it might be to say, it feels like this was about as good as you could have hoped for as someone who owns the stock, just given what the stock did coming into earnings. I mean, I was more concerned about the downside than the upside. And, the
The
options I think
downside
were
being the stock downside or the downside to the numbers?
stock downside just as owners. And if you look at what the options were implying, I think the options, if I remember, were implying like a 10 or 11% move. That was kind of like the bet
Mm-hmm.
on the straddle. And obviously, we didn't get that. I think a 4% move in that context doesn't feel bad at all. And Nvidia, I mean, it's so volatile. It could be up 10% next week. It could be down 10% next week. It's not a
Mm-hmm.
prediction. It's just a reality of this stock. And so I think this is the right reaction, though. Bigger picture is we didn't see anything in the quarter that would lead us to believe that there's a problem with demand. The hyperscalers are still spending. The Blackwell delay, changes, however you want to characterize it. I think that was confirmed, and now it's in the stock. And I think now we can move on from here.
So I think there was something missed. I'm surprised that the stock's not up today because of the guidance. And the general theme, I've looked at other analyst notes out there, I've listened to what other commentary has been. The general theme has been stocks had a good run, and there just wasn't that incremental excitement. If you look at the raise for 3 months ago, they raised the July quarter by 5.2%. They raised it by 2.5% for this October quarter, and so that plays into that whole narrative that it's just getting less exciting. But it's clear they delayed Blackwell. And if you go back and look at the transcript 3 months ago, they were they wanted to make a strong point that we're going to see ramping of Blackwell in October. And now they're saying that that's going to be in January. And they talked about that being several $billions in January. So if you take a $3 billion and you bring that back to the October quarter, because I don't think most analysts changed their estimates, and there was some rumors about it, but I suspect a few analysts did that. And you add that 3 billion back in, they would have raised by 15%. And so you have by 12%. So instead of up 5.2 last raise, it would have been up by 12%. So to me, I'm just surprised more people aren't talking about that.
I think that's, though, partly just the nature of how the stock has behaved more recently. And if it were only people that were really paying hyper-focused attention to AI and everything that's going on to Nvidia, I think that maybe what you just described would have turned out to be true. But the reality is Nvidia is the most popular stock in the world right now, period. I don't think anything is more popular. The last time we saw a stock like this was probably Tesla 2 or 3 years
Right.
ago, where it just feels like there are so many people that are excited about it from retail. There's so much institutional money chasing it. A lot of them don't really care all that much about all the nuances that you just went through. And they're not even that interested about
Right.
what happens to AI
Yeah.
over the long term. They just see that Nvidia is a hot stock right now. They've got this AI theme. And if there's anything that, puts a nick in that
That's fair.
thesis, I think it trades off. I think
Sell.
that's why you're seeing it.
Makes a ton of sense. Well, let's kind of fast forward beyond the next 2-3 quarters and start talking about kind of I think where the real action is, which is around what 25 calendar 25 growth is going to be, and Jensen basically said it's going to be a spectacular year, and then he got a question about calendar 26, and said he's going to continue to see Blackwell into demand into 2026, which I hope so, but didn't really say a lot about it. And it's good to remind myself that the growth is going from about 100% in calendar 24 to the street's at just under 40% to about 17% for calendar 26. So we've got this massive decel. And how should we be thinking about how those years play out? Because ultimately, let's forget about this quarter. Let's forget about the October guide. Let's start focusing more on 25 and 26.
Whether you're a bull or a bear on Nvidia, I think it all comes down to one fundamental question, which is, are the hyperscalers going to continue to spend aggressively building out data centers, right? Bigger and bigger models, which necessitate more and more compute. Do these linear scaling laws continue? If you believe that they'll continue, then not only could Nvidia hit those numbers, there may be upside to those numbers. Because in my view, if that is the paradigm we're living in, if intelligence is dependent upon linear scaling, which means larger model sizes, which means more data, which means more compute, they're going to keep spending money on Nvidia for the next at least 1 to 2 years, because none of them are that close, other than Google, to building out their own silicon. If you're a bear, then you take the opposite side. You say, well, at some point, there's going to be some digestion. Maybe at some point, the hyperscalers have built out enough. They've been over ordering. That's kind of the narrative on that side. I think you have to choose which one you believe. I happen to believe that the linear scaling laws will continue. And I think you're going to continue to see these hyperscalers be super aggressive in building. I just don't see a reason why they would stop.
So I've given a lot of thought to the calendar 26 revenue growth. I think it's going to be closer to 25%. It's not investment advice, but just my sense that this is, in fact, going to continue, as Chairman Powell would say, higher for longer. So we'll jump to our next topic, which is related to Apple. Rumors reported by the Wall Street Journal that they're going to be investing or considering investing in OpenAI's next round. I think that's going to be valued at probably pre-money of $100 billion. What was the last round? 82 or something like that?
They did a secondary in the 80s, I believe. Yeah, I think this one will be probably over 100, would be my guess.
Over 100, and that's over a course of like 9 months, right? We had that kind of 30% bump. So, I mean, this is a kind of a complicated picture, because you got the one side of Apple wanting to get closer to OpenAI and wanting to benefit from all that mojo. There's another piece where Apple's made it clear. They said at their developer conference back in June that they're going to be working with Gemini at some point next year. So they want to kind of keep some of that traction open. And when I think about this, I still am struggling with the piece of Apple's AI future is in the hands of OpenAI and Google. And is this basically their investment in some form of insurance policy to make sure that just like Microsoft has with their $13 billion investment in OpenAI, just to make sure that the lines of communication are open?
I think you could view it as an insurance policy. I think you could probably also view it as an admission that they're not going to go heavy into trying to build a competitive foundation model. I think that's been a question that's maybe been open is, why can't Apple go and spend $1 billion and create something that's maybe comparable with GPT or Gemini? And to me, this says, well, they could probably do that, and maybe they'll get 90% of the way there. But that 10% difference is a huge difference. Think about Bing versus Google. Bing's probably 95, 97% as good as Google, but you don't have any switching costs. So why would anybody ever go use Bing instead of Google when you get that 3% better? I think the same thing is going to be true when we think about intelligence. And so to me, I think this investment is about saying, look, we're not going to go play this game because we probably can't win it. We can do smaller language models. We can do things that run locally on device to be fast and be intelligent, and then hand off what we need to partners like OpenAI or Google. And I think this investment, to your point, ensures that they've got a pretty strong seat at the table with, the one big independent out there other than XAI.
I'm an Apple investor. Should I be concerned that I talk about them being in control of their AI future? I mean, it's the same. Microsoft has the same dynamic. They're not fully in control of their AI future. It really is like Google and Meta are probably in the best position when it comes to that. But is this like a real risk, or is this just my classic feel breeze, prepare for typhoon?
I think, again, you go back to the idea of insurance that you said. I don't think that there is any certainty, let's say right now, that Apple can do something meaningful enough with AI that it really moves the numbers. That doesn't mean they're not going to put good products out, but I think that's the question that still is outstanding relative to the company and the stock. If it's just about selling more iPhones.
By the way, I think they're going to have some killer AI products. We can talk about them in a minute here, but I'm just more concerned, like OpenAI they 5 years from now say, sorry, we're not going to, we decided not to allow access to our models to you. That would put Apple's products in
but the risk of that is low, whether Apple invests or not. I mean, think about the Google relationship and Apple for a decade plus. It hasn't really been the friendliest relationship, but they've continued to make it work because economically it's made sense. I think economically the relationship between the two will be fine with or without the investment. I do, though, think, again, back to the stock, and we can transition to this. The question to me is, if it's just about selling more phones, you can get a one-time pop. Maybe you get people to upgrade more frequently. I think that's harder to believe. But the real gem, if they can figure out how to do it, is how do you get people to pay for the service?
Well, let's jump to that topic. Is specifically there is reporting from Minji Kuo from out of Asia, who does a great job kind of on the supply side, and saying that Apple has bumped up their orders by 10% going into the next cycle. There's a little bit of an eye roll when I see that, because we always hear about bump ups going into a cycle, and then typically like 2 months, 3 months later, you'll hear about cuts, because that's usually what they do. They tell their suppliers, make sure to, I mean, they're just basically pulling out insurance policy. And in the case of their supply chain, want to make sure that they're ready for if demand ends up being a little bit more, and then they cut back. So there's a little bit of, that dynamic going on here. But as I've thought more about, let's talk about the upgrade piece and then other pieces to this. So right now, as we stand, the street's looking for the next iPhone cycle, fiscal 25, for it to be up 7% from 24. So for Apple case, iPhone's basically been flattish for the past several years. And so you could view that as a big acceleration, is definitely an acceleration. When I think about the, like, what does it take to get there? I think it's relatively easy. I think actually there can be meaningful upside to iPhone next year. And just to put some quick numbers on it, is the average life of an iPhone user is about 5.5 years, longer than most people think. They will upgrade about 230 million or so phones per year. If you take the group, the cohort that is the fiscal 26 cohort, and say that 10% of those see the features, these AI features, and say, I want to buy them, and they upgrade a year early, then your growth rate goes from 7% to 15%. If at the same time the fiscal 27 cohort says 5% of those say want to upgrade, then it goes to 20%. So you could see iPhone potentially going from flattish to up 10, 15 plus percent. It doesn't answer your question about, well, that's great, you get a bump for a year, maybe 2 years. What's the bigger, what's the thing that's more exciting? And from my perspective, this can be a 2-year cycle, and I'm confident that these features are going to be exciting. But I want to get to the substance of your question. Like, so you kind of give it to me that they're probably going to have some good years with the iPhone here. Quick side backstory. In 10 years ago, a decade, we were working on this together. There's a lot of anticipation about the iPhone 5 to iPhone 6. iPhone 6 was the first meaningful size upgrade of the display. iPhone growth went from 12% for the 5 cycle to 52% in the 6 cycle. That's an example of when consumers get something that they really want. You can really see some magical things happen. I'm not predicting that here, but I just want to make the point. If these AI features are as killer as I think they will be, I think you're going to see a nice uptick. But back to your question, you're giving me that, right? You'll give me that there's probably going to be a couple good years of iPhone, but your question is more, what's beyond that?
Yeah, that's right. And it's a question that, again, I'll go back in history. We used to always get the question, what's the next billion-dollar business for Google, when Google was a much smaller company? And the answer was always search. The answer was search is going to be $1 billion bigger, and it's going to be 10 billion bigger, and it's going to be even bigger again. And I think that's, to your point, like, I agree with you. I think there could be a great cycle here, but I don't know, and I don't think you're arguing this, that necessarily AI is going to tack on $100 billion
No,
in
I'm not.
incremental iPhone revenue on an ongoing basis. So where's that coming from? Because
Yeah, I
that is
think it
what
could
makes the
come
stock
from,
really exciting.
I mean, there is, we don't have time to go through the sensitivity on some of the uptake of subscription, the premium subscription to like Gemini or to GPT, but it's modest. It adds a few percent, 3-5%. But other devices like AirPods with cameras on, that could be something big. So that kind of taking this generative AI to more of an easy to use wearable. So
I think that,
we'll just, in the interest of time, I'll give you 15 seconds for the final word.
yeah, again, pressure point on Nvidia is, do you believe in the scaling laws? Pressure point on Apple is, will they find a way to build another $100 billion incremental business? I think that's what we need to figure out.
On behalf of DeepTech315, bye for now.